Hello there, I hope that you are doing well. Welcome to this new trades breakdown lecture. During this trades breakdown lecture, I will be discussing drawing lines and predicting the future. As many of you probably have already seen across my social media accounts, whether it be Twitter, YouTube or Telegram, this right here is my slogan. And the reason why this is my slogan is because this is exactly what I'm doing every single week on the markets. I draw lines and I predict the future. The reason why this is my slogan is due to the following. Within the trading space, there's a lot of information about you having to react to what the market is signaling to you. You have to react to whatever is occurring within price action. I am of the opinion, however, that you must be able to anticipate and predict what should happen in the delivery of price. Why am I of that opinion? Well, I believe that all financial markets are rigged, and that allows us to look at time and price from a completely different perspective than the majority of traders. During this lecture, I want to give some insight on how I'm able to draw lines and predict the future, because I want to share with you multiple trades which I have outlined taking place before they occurred, whether it be throughout, for example, my market reviews, or whether it be, for example, through market updates on the mentorship forum, etc. Here on the RE chart of Nasdaq, and the first trade which we're going to take a look at took place on Wednesday. On Wednesday, I had mentioned throughout the London session that I would be monitoring direction to this high right here. The reason why this high was important was due to the following. We saw the market expand towards the downside after we opened up for the week. We saw a retracement taking place higher, then the market had one more push lower, meaning a lower low formed relative to this low. The moment that price displaces above the high which set up that final drop lower, this high becomes a bullish breaker. Notice that we displace through it with a very large imbalance. Notice as well that this high formed inside the CB. Pay attention to the bodies. The wick goes above the CB, but notice that the bodies formed inside the CB. You can extend the CB to the right. You can see a true inversion to value gap. Now, what I outlined throughout the London session was the following. I would be monitoring whether or not we would see a swing lower formation taking place around that level. And what you can see is that when we opened up for the New York morning session, we saw the market drop lower, create a higher low relative to this low which formed throughout London, but notice that Dow Jones took out the low. Therefore, the SMT detector is signaling SMT relative to the London session. That is session SMT, and that is signaling at a point of interest, whilst we are bullish on the higher time frames, that we should anticipate an expansion taking place for that particular session, in this case, New York morning session. What you can see is that the market expanded beautifully towards the upside, drawing towards the previous day high right here. Notice how slow the delivery on Tuesday was. Whenever delivery is so slow and the market is just grinding lower, that is a high resistance liquidity run. Anticipate that when the reversal forms, that the move onwards against that liquidity will be very quick and sudden. This is what I refer to as a low resistance liquidity run. Notice that when we pay attention to the 5-minute chart of both Nasdaq and SES here, I would like to pay attention to why I waited for the 10:45 to 11:15 macro. I would like to pause the lecture for a moment and would like you to investigate into market relationship, and I would like you to pay attention to when SMT formed throughout the New York morning session, which signals the next expansion leg. I hope that you are pausing the lecture because I'm going to walk you through what happened. What I would like to see is that here we have the SMT detector on the screen. And what I would like you to see is that the SMT detector signaled between 9:30, so the beginning of the regular trading hours, to 10 o'clock, no SMT between Nasdaq and ES. And the reason why this is important is due to the following. At 10 o'clock, what we see is that the market spikes up. What did I outline to you? Whenever there's a volatility injection as a result of manual intervention. Whenever there's such a quick spike up all of a sudden, where there's just one 1 minute candle just expanding higher and then dropping down significantly, so there's this very tall wick, what's happening is that after that high resistance will take place, time distortion. So that means price will be held inside of a range, consolidation will take place. And what ends consolidation? What ends consolidation is SMT. Notice that after 10 o'clock, we see a 30-minute cycle SMT be established right here on the lows. Notice that ES made a lower low, whilst Nasdaq is making a higher low. That is signaling to me that throughout the next macro from 10:45 to 11:15, price has to expand towards the upside. Why? Because who do you think is fulfilling their long orders in this area? Smart money. with a lot of deep pockets. So they are buying Nasdaq. That is why it's being held inside of a tight range. High frequency trading algorithms are firing in their long orders around that midnight opening price and around the higher end of that new week opening gap, this green shaded box. Why? Because they know price will have to expand soon to draw towards engineered liquidity from the previous day. Therefore, the macro between 10.45 to 11.15 is anticipated to expand significantly. And that is what you see taking place. Beautiful low resistance liquidity run higher. And eventually throughout the PM session something interesting occurred, which we'll take a look at in a bit. Here on the 1 minute chart of Nasdaq purely. And what I would like to see is that throughout the macro of 10.45 to 11.15, your eyes should immediately go to this piece of price action right here, where you saw the market expand towards the downside, retrace higher, form this high, then have one more push lower, taking out sell-side liquidity resting below this low. Notice that the market then displaces quickly higher, and we see it trade above this candle's high. This right here is your bullish breaker, the last high before the final push lower. Notice that price never returned into that bullish breaker, and we see a breakaway gap get established. The market reprices above the previous 10-minute cycle high, and eventually we see the market distort time inside of that, consolidate, more longs are being filled before the market eventually expands towards the upside, drawing towards buy-side liquidity resting above this high. And this is that high which I'm referring to, where within one 1 minute candle, you see price quickly expand towards the upside, create a very large wick, and then come back lower. Whenever you see this taking place, and this is something for your notes, wait, be patient, wait until the next key time, because throughout the next key time, that is when the delivery will unfold, because you can see that price is simply going sideways right here. It's being held inside of a tight range, and only when the time is right, that is when price is going to expand. Now, when it comes to this breakaway gap formation, there's one thing which I would like you to understand, and that is inside of fractals. So what we will do is we're going to drop into the seconds time frame, the 15 seconds time frame, and we're going to be monitoring the delivery as it occurred in this area. Notice that here we're on the 15-second chart, and you can see that same fractal outlined, but then with more candles, of course, because within every 1 minute candle, there are 4 15-second candles. Notice that we see the market reprice above this high right here. Do you see how the next candle reprices back into the high, then expands higher? Notice that we see a BC get created inside of the red box of the previous 10-minute cycle high. And notice that the market is finding support inside of that multiple times before eventually expanding towards the upside. The reason why that 1 minute gap is allowed to be left open is because the price range is already balanced out in this area. If you do not understand balanced price ranges yet, I would highly suggest you to go on the mentorship platform and research and search for the topic of balanced price ranges, BPRs, because I've discussed this topic multiple times in the past and I've created in-depth lectures on the topic. And it is, in my opinion, the most crucial element to balanced price ranges. When we then pay attention to the afternoon session, however, what we can see is that the market expanded heavily towards the downside. We saw a PM reversal taking place. And unfortunately, myself, I wasn't behind the charts. I was out for dinner and I was looking at my phone and I was like, damn, that was one hell of a sell-off. And I wish I was at home behind the desk, but you know, that's reality, guys. Sometimes you're going to miss out on the most beautiful low resistance liquidity runs, textbook setups, and it is what it is. And the way that you counter that feeling of, oh, I should have been a part of this, I should have been there, I shouldn't have gone out for dinner or whatever, those negative thoughts that might arise, the way you counter that is by understanding that there's always a new setup around the door, and you should view setups that you didn't participate in but still played out according to your models as the following. Look at it as more proof that your protocols are working. Look at it as more clarity, so to say, that behind the fact that you know what you're doing and the models which you trade based upon work. And when you start changing that internal dialogue like that, you will all of a sudden don't feel any regret, and you will also not feel like, oh, I should have done this, I should have done that. Stop with all of that negative thinking and just focus on doing that what you know to be the right thing. And you're human and you need to live your life. Don't think that you should just stay indoors and sit behind the charts all day. The reason why you're probably not basically performing as well as you think and know you can perform is because you're glued to the screens. Your performance will skyrocket the moment that you will start living your life more and don't go into the markets for a sense of dopamine. Instead, you just live your life, get real dopamine, spend quality time with your loved ones, with your friends, etc. Do fun things outside of the charts and simply come to the charts when you know there's a setup like going to take place. And if you took a phenomenal trade throughout the morning session, no one's going to blame you if you skip the afternoon session. You don't got anything to prove, guys. Like, literally, don't think that simply because the market is moving up and down and other people might be trading, that you should also be trading. Take surgical strikes. Take your shot, and when it pans out, when it's done, stop, come back later, and see whether or not there's anything else, and else call it a day. Learn to be content with enough, guys. But what I would like you to do is I would like you to pause the lecture for a moment again, and I would like you to think about the reasons why price expanded towards the downside so heavily throughout the afternoon session, because I'm going to walk you through this. Even though I didn't trade it, I still want to show to you exactly why this was a perfect setup. And to see some of you having taken this, I saw some messages on the mentorship forum, it made me smile, because this is a typical juicy mentorship setup. Please pause the lecture, because I'm now going to add my lipstick to the charts. Here you can see my lipstick on the charts, and what I would like to see first of all is that the AM session expanded towards the upside, taking out previous day high buys liquidity, that high resistance liquidity right here, and we then saw the market create SMT between Nasdaq ES, where you can see that Nasdaq created higher highs whilst ES created lower highs. Notice that Nasdaq repriced into Monday's high, this week right here, and do you see how the market rejected that? That right there shows to you that this is a bearish rejection block. The SMT between Nasdaq and ES is signaling to you that price might reverse soon. Because imagine that you're a retail mind trader. Imagine that you have no clue about time or price, and all that you can see is candles going up and down, sideways, and whatever, right? And you see these big green candles. The natural emotion which gets awakened is, oh, the market is very bullish. I should be buying now. I should be long. I'm missing out. Man, get me in the long position. And back in the days, people were calling up the brokers and they were saying like, get me in Nasdaq longs now, blah, 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 right? But that's the emotion which gets awakened when the market is expanding so heavily towards the upside. Understanding that right there and understanding time, which is signaling to you that we might see the daily delivery profile of AM expansion, PM reversal, shows to you that if we're going to see the signs of reversal taking place right here, that we're likely going to see PM distribute lower heavily. Notice how quick this 1 PM RE candle expanded lower. Beautiful low resistance liquidity run against all of the buyers from the morning session, because who's making money all throughout the day? Buyers. So what liquidity has been engineered? Sell side liquidity. Beautiful expansion lower, drawing towards the Monday low, even as you can see. Now, when we pay attention to the lower time frames then and we compare Nasdaq and ES, what I would like to see is that on the left you can see Nasdaq and on the right you can see ES. Notice that between the 1245 to 115 macro, we saw Nasdaq create a higher high right here after 1250, whilst ES created relatively equal highs, meaning lower highs. That means that there's SMT on the lower time frames as well. Notice that this SMT gets followed by displacement lower. So if we purely pay attention to Nasdaq then, what I would like you to see is that the moment that this SMT unfolded at 1250 right here, notice that we saw the market expand lower, and notice that we saw the market displace below the low, which set up the final push higher. Notice that this low functions as resistance from price, and notice that the market traded below the rejection block price level from Monday. The market displaces lower, and 1 PM opens up. 1 PM opens up, initially has this upclose candle higher, and notice that the market then displaces lower, big down candles. This upclose candle is a real bearish order block. Price will seek to revisit that order block, so that smart money can sell more. Notice that the market displaces below these lows, which formed inside this BC on the left side of the curve, with a CB. So what is this? Juicy market structure shift pattern. Market retraces into that CB, into that inversion for value gap, into that bearish order block, into the 1 PM open, and expands lower heavily. And do you see how quickly the market expanded lower? There was one more displacement leg followed by a retracement right here, where you see eye of fat, institutional order flow, entry drill taking place, and the market then just ripped towards the downside. Why was this eye of fat? Pay attention to the left side of the curve. Beautiful expansion lower, and you can clearly see a market make a sell model with an origin consolidation right here, and this was that marker of 10.45 to 11.15, where I bought off throughout the morning session. So what you can see is very clearly buy side of the curve, sell side of the curve. Buy side of the curve rather slow with a lot of chop, especially throughout the lunch, but then the second PM cycle opens up and immediately just distributes lower. Beautiful lower security run, and this is a textbook setup if you're interested in the afternoon session. So definitely worth investigating, and that's why I wanted to bring it up throughout this review as well. But what's important to note, to bring it back to the topic of today's lecture, is that you can see on the RE chart already what's likely going to happen throughout the session. Those are the high probability trade setups. The setups which you just are justifying based upon a 1 minute fractal or a 15 second fractal are not high probability trading setup, guys. The high probability trading setups get justified based upon a higher time frame, where you can clearly see from the higher time frame what's likely going to happen next within the delivery of price. And those are the types of setups I'm teaching you to focus on. Everything else is noise. Everything else is a distraction. Literally zoom out and make sure that you see it coming. And when you see it coming in advance, that is when you know, okay, price should do this XYZ. And when XYZ delivers, there's no ambiguity about it. There's no doubt about it. You're not going to be hesitating. You're simply going to see the opportunity pass by, and you're going to take a shot when you know that the prey is in sight. That's what the sniper does. Good preparation, and when the prey is in sight, the shot gets taken. Now, when we pay attention to another trade example, what I would like to see is that this trade took place on Thursday. On Thursday, throughout my daily review, I had outlined to you that I was anticipating Nasdaq to form a swing high in this area right here. I was anchoring it to multiple imbalances, even more to the left side of the curve, but for the sake of simplicity and making sure that I'm not overcomplicating things for you throughout this lecture, I first of all want you to pay attention to this BC. Why was this BC important? Because this was the same BC we were paying attention to on Wednesday. If you remember, this BC was the one which displaced through that high, setting up that market structure pattern. The fact that it did not function as support on price, it did initially, but eventually failed to do so, tells me that I'm able to utilize this BC in the future as a point of interest for a market maker sell model. After Wednesday's expansion, what we saw taking place was that throughout Asia and London, the market just slowly grinded higher. Do you see how it was just chopping around, consolidating? What that's already signaling to me is that we're likely going to manipulate higher to distribute lower. Why? Because what retail is being trapped into believing right here is that we have clear support right here. They can draw a clear trend line towards the upside, signaling, hey, we're in a buy program, we're bullish, we're looking for higher prices, etc., right? But I look at this as one thing, the engineering of sell side. From the midnight open, price did one thing, and that was run up higher slowly. London high gets established, and what you see taking place at 7 a.m., this downcourse candle, is that New York, which opens at 7 a.m., as I taught you within the 90-minute cycles, New York opens high, takes out the London session high, comes back into the algorithmic reference point of this old BC, and immediately slams towards the downside, drawing towards the previous day low. And what you see taking place from the previous day low is that 8 o'clock opens low and expands back towards the upside. Guys, this is what I mean. There are so many trading opportunities. Like, I saw a lot of you also take the buy afterwards, and it was beautiful. And this is something which I've been telling you for a long period of time now, is that where some exit, others entered. Meaning, I exit at the previous day low. That was the sell program completed. The highest probability trade for the whole day was done. Why was this the highest probability trade? Well, this was the trade I had outlined hours in advance throughout my market review throughout the London session. So I literally outlined the whole delivery throughout my market review for the New York morning session. So do you understand that when that move is done, I'm not interested in anything else? I'm not going to be looking at the markets. I don't care, guys. When I make my money, I'm done. And it's the mindset that, in my opinion, must adapt, because else what will happen is that you're going to fall into the trap of what the majority of traders fall into, where they're never content with enough. And that's a toxic culture that unfortunately gets established nowadays by prop firms, because it is basically, they have rules in play that force you to do things. They give you that feeling of you should be doing something today. You should be, just pushing it. Or that's also what social media invites, right? You should be going out here and trying to, show off to the world how good you are. And if you fall into the trap of believing that, what's going to happen is that you're never going to be content with enough. And I'm teaching you not only how to draw lines and predict the future, and I'm not telling you to go out here and trade based upon these concepts, by the way. Let's make it very clear. I'm simply outlining to you what I did within the markets, and I'm explaining the rationale behind it. But whenever you go out here and you decide on your own that you're going to trade based on these concepts within a demo account, I'm never going to tell you to trade live. But if you decide to go out here and trade based upon these concepts, be content. Learn to be content with enough. Over time, you can increase not the trade frequency, but the amount of risk behind those trades which you were already taking, which you knew were panning out. I think that's one of the biggest mistakes that a lot of new traders make. That they have a system that works, but all of a sudden they feel like they should be doing more. They should be pushing it harder. They can't accept that it's really this straightforward. Well, it is. It literally is this straightforward. It's not complicated. It's simple, yes? But in order for you to stick to that simple system, which I'm outlining to you here, that is where discipline comes in. And you don't realize how powerful discipline is and how important it is until you fall into those traps that the majority of traders make. Everyone has done it, and that's okay, as long as you learn a lesson from it. Don't fall into the trap of simply taking trades because you want to take trades or you want to do something. That comes back to what I outlined prior throughout this lecture. Make sure that you have real sources of dopamine in your life. Real sources of fun, where you feel a sense of fulfillment. I don't get my fulfillment when I'm trading. It's that simple. The only thing that gives me fulfillment, yes, is when I make out my game plan and execute with perfection. That's it. I don't care about the money which is being made. It's a byproduct of me doing that what is right. And that's the focus. That's the mindset. And I hope that you're understanding that I'm using my emotions throughout this lecture to make that light bulb moment click for you. Because the messages which I'm receiving from time to time are like, I see my old self in some of the messages which I receive. And I absolutely love to see that because I know how I overcame those mental issues which I was dealing with. I also dealt with all of those, mental struggles that you're going through now. But the way I overcame them is by simply objectifying my whole approach. Why do you think this mentorship is called Time and Price? Because I show up when the time is right at the right price. And when my trade is done, it's done. And I don't care about anything else. And that's the mindset which I want you to learn to adopt. And I know that some of you are not interested in all of this ranting. You're probably I know that some people already clicked off. And it's funny because on the platform, we can actually see how far each, student goes. And there are some people who just click off 1/3 in the lecture. Some people just watch it halfway and then they're like, okay, then he goes on the rabbit trail, bye-bye. And others actually complete the lectures. But let me tell you something. The people that actually are still watching at this stage, you have what it takes. All that you need to do is submit to a little bit more time, fine-tune some things here and there, and eventually all the light bulb moments will take place. And that is something which you need to have full faith in, because you need to have to believe before the results are actually there. And the moment that you have to believe, watch it become super straightforward and watch it to do. Do that what is right every single freaking day. And if you commit to that, watch the magic happen. Here on the 1 minute chart of Nasdaq, and what I would like to see is that when we pay attention to the 7 o'clock open, which is right here, what you can see is that the market expanded towards the upside. Notice that an imbalance formed right here at the beginning of 7 o'clock. Notice that eventually we saw the market reverse after we saw SMT be established between Nasdaq and TS relative to that London session high. We see the market reprice towards the downside heavily at exactly 710. Notice that multiple CBs formed right here, and notice that the market traded into the lower fair value gap which formed right here. We form a low there and the market retraces higher. I am however not willing to short just yet, and the reason being is due to the following. What I would like you to understand is that what I was waiting for was for Nasdaq and DS to displace in tandem towards the downside. This is a key insight which I'm sharing with you, where you can pay attention to Nasdaq and ES displacing towards the downside. If you investigate my execution lecture, or execution video, what you can see is that I'm clearly waiting for one thing, and that's for SMT on the downside, on the lows, to be invalidated, because that is signaling to me that both Nasdaq and ES are moving in tandem with each other when it comes to the sell program. And that's something I actively look for. And that's a gem which the majority of people that didn't listen to my rant probably will never pick up on. So what you can see is that we reprice through this low, which formed inside of that BC. And notice that a very tiny inefficiency forms inside of the price range of this old BC right here. See the market retrace into that BC at exactly 7:30. New 30-minute cycle opens up. And we open a high into this small little inefficiency, form 3-minute cycle SMT, and the market begins to expand towards the downside. Notice that the market utilizes this inefficiency, the first value gap at 7 AM, as an inversion value gap, and the market repriced lower heavily. Notice that Nasdaq repriced below the previous 90-minute cycle's low. This low I'm extending to the right because, as I've told you, within the time cycles theory is that whenever we displace below our previous cycle low and we're bearish, we're looking for the previous cycle low to function as resistance on price. What you can see is that price retraces into the previous 90-minute cycle low, spends some time there, and eventually the market begins to expand towards the downside heavily, reaching the previous day low. Now, when it comes to the delivery in front of you, there's one question which was asked on the mentorship forum, and that was the following. Zeus, why are you trading outside of the times of interest as you've taught them for the morning session? Why are you trading around 7 o'clock? Because the opportunity which I had framed was already being presented at the beginning of the New York morning session. So that means I'm using the macro from 6:45 AM to 7:15 AM to look for the signatures as I've taught them to you as the reversal sequence. Yep. My focus is on recognizing swing points. And whenever I see big time cycle SMT, that's the first sign that a swing point is likely going to be presented. And therefore, I was interested in the beginning of the New York morning session because that was the cycle which would likely distribute towards my objective. With that being said, this lecture comes to an end. I hope that you found it insightful. I hope that my rants didn't throw you off or something. I hope that you were able to gain some value from it. I want to thank you for watching it all the way to the end. I want to wish you good luck in your studies. And I look forward to speaking to you soon again. Have a blessed day. Be safe.